Good morning and welcome to the Business Brunch. This morning I'm joined by Jonathan Walton of Whitley Stimpson and Jeff Binder of the M Group. Good morning, guys.
Morning.
How are we both?
Very well, thank you. Yeah. Looking forward to a good weekend, and hopefully the weather will stay good for us. It's certainly a sign of spring out there at the moment.
So we're going to be talking about building blocks for recovery, but go back 12 months almost to the day when we first went into lockdown. What are your memories from that particular period? Start with you, Jonathan.
So tomorrow is my son's birthday, and we were lucky enough to get to go to Pizza Hut last year, and then his younger brother, his birthday's on the 23rd of March, and we couldn't go anywhere. And of course, this was the beginning of everything going a little bit different for us all. Our office closed down 4 or 5 days before Boris closed the whole country down for lockdown number 1. But we've adapted quite well, and we've had a pretty decent year, to be honest. And I'm pleased to say we've not had that many casualties of clients either.
That's excellent. And Jeff, what's your sort of memories of this time last year?
Well, I guess the first of all, it's hard to believe it's been a full year. I think this time last year, our thoughts when lockdown was first mentioned were this could last for a number of weeks, and weeks turned into months, and a lot longer indeed after that. And thoughts of a vaccine, which started to be talked about a few weeks or months into the lockdown process, certainly felt like it was going to be something maybe years away. To think where we are now, particularly in the UK as a country, and what we've managed to achieve in terms of our vaccine rollout, and the difference clearly that is making on the way that we feel and on the confidence in businesses is remarkable. To find ourselves in this strong position again. But similar to Jonathan, for me, I was used to the daily commute into the office 5 days a week, as were all of my colleagues, and the use of these types of platforms was something that probably I didn't get greatly involved in. However, now it's become the norm for many of us, and I've predominantly worked from home, as have all of my colleagues over the period of the last year, and we've all got a lot more familiar and confident with using, whether it's Zoom or Teams and the like, and I think they're probably here to stay for the future.
Interesting. Yeah, thanks, guys. I mean, when I look back a year and members making mad dashes round shops to get provisions for not only my family but my parents, and sort of things that we've got used to now. Things like wearing a mask. I'm sure if you walked into a shop without a mask on, we feel pretty exposed. But it's some strange new normal things, and we've probably forgotten about a lot of the normal things that used to be with us every day, like commuting. Like having conversations with colleagues in offices. So we're now a year on, and as you say, Jeff, a bit of confidence coming back in, and you're very much focused on company acquisitions and the corporate finance side of things at the M Group, and you're seeing a bit of confidence coming back into the market with more activity.
Yeah, absolutely, Richard. I think that confidence, that level of activity was already starting to show itself towards the end of last year. So Q4, I wouldn't quite call it a full bounce back, but the signs were there, the number of inquiries coming in, and the conversations that we were having. And it probably took a week or so in January just for people to blow the cobwebs away. But by the middle of Jan, we were really starting to feel some confidence coming back, the number of inquiries definitely increasing, people wanting to have conversations about exits, but also, interestingly, acquisition as well. So those businesses that have fared well throughout the pandemic, or have at least had a fairly stable period of time, see opportunities in 2021 and beyond. And we're speaking to many business owners at the moment about investing in either their own businesses for growth and expansion, or indeed to make acquisitions in the market for complementary companies operating in the same type of space. So we're taking real encouragement from that at the moment.
We had a press release submitted to B4 recently from B4 members Freeth, whose level of acquisition activity has gone up significantly, but they're saying the actual valuations are holding good, and they're not sort of like fire sale acquisitions. Are you finding that as well? They're not desperation sales by businesses just wanting to get out.
I think there is a whole range of opportunities out there. There are clearly some businesses that have struggled through the pandemic and are in some distress. We're all aware that the loans that some businesses took out are starting to become due for payback now. So that first anniversary is starting to hit. And in any market, pandemic or no pandemic, there will always be businesses looking for exit for a whole range of reasons. Value it will always be important to shareholders looking to exit, but I think it'd be fair to say for those businesses that have struggled and are under some pressure, their valuation expectations have probably been suppressed on the back of what's happened, and there'll be a keenness on their behalf to find a way to exit, even if it means a slightly reduced valuation versus what they might have expected 18 months ago. But for a good business, I think they can be confident that valuation will hold up despite, and that's always been the case. Good businesses will attract a healthy range of buyers and interest.
I'm sure there's a number of business owners looking to exit that maybe 12 months ago weren't even considering it, but just want that lifestyle change that's right. That this last year has sort of brought into focus.
I think there's an element of fatigue probably for people. There's a lot of owners out there that will have traded through the financial crisis, will have dealt with Brexit, which we all know lasted a lot longer before resolution than we would have anticipated. And then obviously COVID came along as well. So for those owners who've possibly delayed their decision to exit, COVID and the pandemic, the whole experience that they've been through in their business might have been for some the final straw. So yes, we are also speaking with people who feel now's the right time, and they don't want to even anticipate possibly what the next hurdle or challenge might be for them.
Yeah, I think after a fairly turbulent period of recession and then the protracted Brexit negotiations, everybody thought, well, nothing could top that. But I think what came left field caught all of us off guard. So,
and hopefully it's a once in a lifetime experience for all of us, and we can move on and put this behind us. And it looks like the roadmap that we're on, that's obviously been set by the government, will give us that opportunity as well.
Brilliant. Jonathan, over to you. And back in the summer, which seems like about 10 years ago, because I think a lot of people are saying, we've had 10 years of activity in the past year in various, guises in technology and all those sorts of things. We talked about the importance of cash back in the summer, didn't we? And talking about building blocks for recovery, and that's something you're still preaching, but obviously is key for any business going forward.
Yeah, I think a couple of us at B4 that are on the professional panel, we're seeing some businesses that are drying up with cash, and as Jeff said, there are some now quite critical points. So for those people that deferred a VAT for a year, if you remember, there was a period of a quarter last year where you could defer it. A lot of businesses just did that because of the just sheer uncertainty. So they've now got that to sort. The government allowed people to sort of file their tax returns late, but they still expected tax payments to be made for personal self-assessment back in January. And then, of course, there was the July payment last year, which people rolled over into the next January. So that all fell due. So, we're now finding people with the VAT deferral to pay back. They've got the COVID loans. Some of them are lucky enough that they haven't spent the COVID loans. They're now thinking, well, should we repay those? What's the level of uncertainty for the future? And of course, We all know that if lockdown 3, kind of the theory was that when people went back to school, the virus just ended up getting worse again. So no one quite knows what's going to happen. Of course, the vaccine is going to help. But the issue has always been that cash is king. The issue has always been that you have to pay your employees, you have to pay your suppliers, and you have to manage your cash inflow and outflow. And accounting packages these days are so sophisticated if they're used properly. There's a handful of packages that we're very familiar with. I won't name names of them all, but I mean, they're all pretty much easily searchable on the websites. But I mean, they can not just put in invoices, not just deal with creditors and debtors. They can actually forecast and plot where a business is going to be. And if you use them properly with budgeting and things like that, you can begin to take your management information, and rather than thinking of it as a historic set of data, you can look at it as a forward-thinking set of data, and you can run the what-if scenarios, and for sort of short-term and medium-term periods. I mean, I know people that have meetings on every Friday, and fairly big businesses with turnovers of millions of pounds. They have a meeting every Friday to say, well, what's going to happen next week and next month, and then maybe 3 months time. And of course the focus is on the immediate future first. But they're always forward thinking and planning, and if they lose a big customer, which they did unfortunately, then they've got the ability to sit and think, well, what's the impact of that, because the data is so up to date and so carefully prepared. And then on the other hand, 2 weeks later, they're in the frame of getting a very large customer. So they can think, well, okay, well, that's really good. If this comes in, what does this mean for our business? What bits were we thinking of not doing, or what redundancies were we thinking of making that we may not need to make anymore? But the fact that the data was crystal clear, up to date, just helps them do the planning. And we're finding a lot of our role has been, ever since the very first lockdown, is just to help clients through the process. I mean, lots of accountants like to think that they're the first port of call for any client, and I think it's true in a lot of accountancy firms. It doesn't matter what the problem is. We tend to get the first phone call. But the cash and the management of the business, and the fear, the fear of the future, even things like supply chain fear, customer bad debt fear. All of those things can be modeled into sort of forecasts and planning that will just give you information that you need at your fingertips day by day. I think it's really key.
I hate to think how many business plans and forecasts have been sort of torn to pieces within days of sort of being printed out over the last year. But obviously your role has been vital. And I should imagine your relationship with your clients has grown stronger over the past year as well, Jonathan. And as you say, you're their first port of call, but I'm sure the last year has really cemented a lot of relationships with clients.
Yes, I think it has throughout the firm. Clients, as I say, that they, as you've just said, they come to us as the first port of call. So, and you've got to be realistic with the client's expectation of fees. I mean, the amount of work that we do, a lot of payroll, we do hundreds of payrolls, and you can imagine the amount of work we did for the furlough scheme claims, and I don't know how many of our clients as a percentage had their employees on furlough, but there's going to be a lot. And so, as we're processing the payroll, we're processing the furlough schemes, and you've got to think to yourself, well, people want their handheld. They want to understand the rules. They want to know whether it's applicable to them. Even they, rather than look at the government website, they quite often come to us and say, well, what does this mean? And what does are we eligible for that type of grant? Are we eligible for the rates reduction, et cetera, et cetera? And it just builds a great relationship with clients, and that's why it's really important to be their trusted advisor and their first port of call. But yeah, some of the queries we've had, they've not just been accountancy questions at all. I mean, they've been shoulders to cry on in quite a few cases.
And you were saying before we went live that it's been a good year for Whitley Stimpson, irrespective. But I should imagine there's been countless hours of being that shoulder to cry on, and just informing clients, especially those that are in precarious positions in sectors that have really suffered, where you can't put those chargeable hours in, and it's really been just that shoulder to cry on.
Yeah, and that's absolutely true. I mean, in retail and stuff, they've not been open. There are clients we have that rely completely on imports from China. Well, that was closed down for a long period of time. We've had clients that have seriously suffered with some of the Brexit VAT issues that have been going on with things like triangulation, which I won't bore you with, but it's kind of Even VAT experts were kind of like, oh my gosh, it's been like 24 hours notice of how to deal with a particular VAT issue, and it's caused headache and panic. And at the end of the day, we have to sort it out. They come to us to sort it out, but you can't charge for it. But I mean, some of our clients have been with us since 1930s and 1940s, and I haven't been around since then. But I mean, as a firm, we look after people for generations and generations. And one of the nice thing about if you put a little bit of effort into somebody, then they'll stay with you, because that's what the relationship's all about.
Yeah, we had Olivia May, one of our retail members, on recently talking about the implications of Brexit and trading and all the changes they've had to make to software in terms of delivery charges. And it just sounds like an absolute minefield. And they've had to figure that out, no doubt, with support. But for you guys, you had to get your heads around it as well. So it's been a learning phase for all of you.
Yeah, it's been a good source of income too, as well, because we've had a number of inquiries, and I'm sure Jess firm's the same, but we've had a number of inquiries from people in like Monaco and Germany and France and Spain and etc. that have realised that actually they need to do something about their UK sales, which they didn't have to deal with before. So it's actually been a pretty decent source of work too. But then on the other hand, we've had clients that have had to think about setting up centres in Germany or Northern Ireland or Southern Ireland or whatever reason, just to get around all those VAT rules. So it's been quite exciting, but a bit dramatic, I have to say. And trying to get a VAT consultant to give you feedback has become tricky. They're just so busy. So, but it's been good. And I'm not, as far as I'm aware, everyone we've helped has got there. I remember taking advice about registering in France, and someone said, "Oh, it could take you 4 months to register in France," and it's like, well, no, that's not going to happen. With 4 months' time, having to suffer a load of VAT is just not very good for cash flow.
No, exactly.
And I think the only other thing I wanted to say about the cash flow was one of the posts that I made was to do with the COVID-related loans, and I do have concerns that some people have misspent them, and it's just things I read on in professional magazines more so, but I do believe that some people have used them not for the purposes that they were intended, and I think if someone has done that, they might like to think about taking advice about that from either a solicitor or from an accountant, because that's the one thing that you can get into. That's not the one thing, but it's one of the things you can get into trouble for. So if you have kind of used it to buy your new Porsche, maybe just think about a way of getting out of that one.
You referenced one of you referenced lockdown 3 potentially, and looking at how supportive the government. I mean, everybody's got their own opinion about how the government's performed over the last 12 months, but obviously they've had to learn and adapt and flex as much as they can. But there's only so much money in the coffers, and how much more flexible can they be? And if we do go into a third lockdown, how much more money is there basically to support businesses through another similar period?
I've got some thoughts on that, Richard. I would say that we've seen unprecedented levels of support from the government, way above what might have been anticipated. And I saw a clip, I think it was towards the end of March last year, the Chancellor speaking about the level of financial support that would be made to businesses, and that was a level at the time that we thought was remarkably high and possibly very generous as well. Where we are now in comparison to those figures is at a transformational kind of level, and it's unprecedented in our time, even comparing back to the Second World War and the like. So I think the government, it's quite easy to find areas for improvement and to find areas that they could have obviously done better possibly. But at the same time, I think the general feeling, and this was after the budget as well, that they've responded to the very difficult conditions that couldn't have been predicted or anticipated. There's still a good level of support out there for business with a number of different schemes, and we're seeing launched on the 6th of April a new scheme to help businesses to replace CBILS and BLB, which will be open as well to businesses that have already benefited and taken advantage of those existing schemes. So support continues, and I think it needs to. That's recognised for us to get bounce back in this boost we're looking for. in 2021 and into 2022 as well. And lots of people I'm speaking to, there is a general feeling that it probably will take into the following year before we're really starting to feel that the economy's getting back to the position that we were in pre-pandemic.
Yeah, I'd agree with that completely. And I mean, if you look back on the budget that happened on, I think it was the 3rd of March, but if you look back at that, the headline really was about the increase in corporation tax rates from 19 to 25 for the sort of larger companies, which is something we had, a couple of decade or so, 2 decades ago. But I mean, if you look at the way that the Chancellor looked at capital gains tax and income taxes, etc., they were barely changed. And I think that gives people confidence and stability for the future as well, because if you know that your corporate tax bill is going to go up from 19 to 25% as a large company, you can certainly plan for it because you've got pretty much 2 years to sit and worry about it. And if that's the most dramatic thing they had to do to raise taxes, then I think we got a pretty decent budget from that perspective.
Yeah,
excellent. Guys, I want to close by just asking both of you for your sort of standout building block that you'd like everybody to focus on in the short term to help longer term recovery. And I'll kick you off. It doesn't have to be necessarily accountancy or finance related. It can be about your teams. It can be about any aspect that you want. But I mean, one thing I'd like to say, and it's a little bit of a plug for B4, I suppose, is for people to to do exactly what Jeff and Jonathan have done here today. Put themselves front and center, or put yourself front and center, and keep giving the advice, keeping everybody's conscience, keep delivering advice through webinars, through articles on LinkedIn or blogs, whatever you can do. Just keep staying front and center, because although we'd love to be able to go back to face-to-face events, the opportunities for connecting with people are going to be fewer going forward, and I think it's going to be vitally important for every business really to step up its game in terms of presenting information to potential and existing customers. So that would be my building block for going forward, with a little bit of a sales plug in there as well. Jonathan, what would your focus be?
I think communication is key, and so I'll just build your block slightly higher. And I think we've tried very much to be on social media everywhere, and we've participated obviously in the B4 as much as we've been allowed to. In terms of internal communications, we've still got our Whitley Weekly, which is something that goes to all staff, and then sometimes it's difficult to get content every single week, but our people in our HR team, they spend a lot of time making sure that it's worth and funny, and it's got cartoons and jokes. And we had a team meeting this week in High Wycombe, which I think there was 2 people on holiday, but everyone else attended it, and we did a truth or dare, which was a bit of a scream, and that just ended in hilarity, really. I mean, and it was just silly, but keeping that level of communication open with employees is really key, because we've got employees that they've had to move, come from university, come to work at Whitley's, and their family are miles away, their friends are miles away, they're living in houses of multiple occupation, and so they can be quite lonely. They don't want to necessarily associate themselves or go out and play with their next door neighbor, so to speak, because they can't. So we are sometimes the best form of communication they've got, and to keep their days all kind of positive and happy, and I think we're actually quite good at it, to be honest.
Fantastic, brilliant, sounds good. Jeff?
Well, I think it's interesting.
You have to build on the communication block if you don't want so, but
no, that's fine. I was going to say it's interesting. All 3 of us are probably focused on a similar theme and communication, but there are lots of spin-offs from that as well. As I said at the start of this conversation, we've had to all learn new skills and different ways of working. We've had to take our clients with us on that journey as well. I've worked with clients who've never used any of these digital platforms previously, and they've had to learn to interact and communicate with their own teams and their own customers and suppliers differently, and with us advisors as well, trying to help them. So yes, we've learned new skills, but we've also had to learn to be flexible and to listen and to adjust and to show agility, and to use all of the different types of communication that are out there keep people informed, to keep people engaged, and to encourage people and to motivate people as well. And we've all dealt with this last 12 months differently. Some people have coped extremely well, others clearly have struggled, and we've heard a lot about those people who've maybe faced challenges that they wouldn't have anticipated in normal circumstances, coming into the office and mixing with colleagues. As the economy, as business starts to open up again in the year ahead, I think we just need to remember what we've learned and realise that everyone's been through a different experience. There's lots of talk about the workplace will be changing and possibly on a permanent basis to a more flexible model, more working from home. That's going to be good for some people, but maybe not necessarily so for everybody. So I think as leaders, as managers within business, we've just got to be very aware of how we reopen the office, we get back to some level of normality, what that means for different people, and just give ourselves time to readjust and think about every individual and the importance of communication, the importance of culture. I'm with you, Richard. I think we should continue to use LinkedIn and all the different methods that are out there to keep communicating with each other, and these types of events and opportunities are a fantastic example.
Brilliant, guys. I mean, I think both of you sort of have really focused on the importance, not just communication with customers, potential customers, but with teams. And at the end of the day, without our teams, we haven't got a business. And I mean, it's interesting really how we possibly got a lot closer to our employees than when we had them, sitting at the next desk over the last year. We've had insights into their home lives. We've got to know them a lot better, although we've been working remotely. And I think barriers have been broken down. Yeah, no, you're right. Yeah,
definitely broken down. We've seen into each other's homes. We only knew our colleagues, I guess, in one dimension in the office, really, with the odd social event thrown in. Now we've seen inside people's houses. We've got to know them. And I think we're all just a little bit more relaxed about the whole situation. There's a certain etiquette that used to exist with these types of interactions. And it just feels a bit more comfortable now and a bit more relaxed than it used to. I think that's a positive thing.
Definitely. Brilliant, guys. Well, it's been a pleasure talking to you both. Jonathan, Jeff, have a good day, and hopefully we'll catch up soon. And Jonathan, you're always welcome. So it's not a case of not being allowed to. And we've had you
playing.
We've had you on twice this week, so I look forward to seeing you tomorrow, maybe.
Thank you, Richard.
Take care, guys.
Cheerio, Jeff. Bye. Thank you.
Bye now.